and strategic petroleum reserves like a savings account. It's something that sits there until there's an emergency. Think about flows as your paycheck. Oh my God, this is like the greatest oil crisis in history. Why are oil prices, in the $85 to $90 range? The answer is because we have a lot of money in our savings account.
Art Berman, petroleum geologist and renowned energy market expert. It is a true pleasure to host you on Palisades Gold Radio today.
And thank you so much for having me back. I really enjoyed our previous conversation.
Me as well, and very excited to dive into this one. Now, as a backdrop to this conversation specifically, we're now swiftly approaching day 175 of the Iran war, and with that, disruption of the Strait of Hormuz and destruction of oil infrastructure in the Middle East. Now, I would love to start off our conversation today asking the two main questions I think anyone that are following energy throughout this cycle are contending themselves with. The first would be, why haven't we seen larger disruptions to our daily life here and to the US, to the global economy, really, understanding the severity of this disruption? And number
all right,
two,
this question is taking too long.
Skyrocketing right now in North America, Europe, and Asia. Are we on the cusp of seeing those disruptions materialize?
Well, those are very good questions. And let me start with the first one. And what has happened since our last conversation is that there has been considerable offsets to the initial estimates of production loss. So we initially thought, okay, we're going to lose 20 million barrels of oil per day. And through a variety of mechanisms, bypass pipelines, and a certain amount of oil kind of sneaking its way through the strait over time, we're now probably only down about 5 million barrels a day. Now, those are very rough estimates, but that gives you some idea. So the amount of loss was only about a quarter of what we thought, and I'm certainly willing to accept accountability for whatever statements I made. The only comfort I take is I was not alone. I think all credible.
All right, that's enough of that. Sorry, I got started very late today, 5:30. I don't have my phone, so I can't give you an update on prices the way I normally do, but I do have a kind of a intermediate phone, and I can go to Yahoo and give prices, so we can look there. It's by way of saying I don't have the apps on this phone that I had on my other one. And the bond market's giving us some warnings. All right, let's look at ads. Okay, so finger motion, for example, closed at 22 cents, 0.2202. They can sell stock and then exercise it with the company. That's the legal stuff going on, the mechanics going on at around, I don't know. Actually, I'd have to check what the formula says, but the last time I looked, it was 18 cents. It might be lower now. So it's all profit for them. Next Trip, I think, has good news, but the stock is also suffering from that same selling off. I think the opportunity, though, of course, it doesn't come up. is management is going to, sorry, it's not coming up. Yeah, it's down 2.5 cents at 133.5. I warned everybody that I thought that the system would sell it down during August, but I think the opportunity, well, I believe as long as the Lind deal is out there without institutional buying, that they're going to grind it downward. That doesn't mean it's a bad investment. It gives a chance to establish positions at extremely cheap prices if their fundamental story is what it's projected to be. So next trip, I think there's an opportunity to add shares, but they're when you take money from the beast, you're going to get mauled, just like any other company. The difference is in execution, and the document does have distinct improvements over others. However, you got to understand the machines, the selling machines have a daily goal, a weekly goal, and a minute by minute goal. And it's almost always to the downside. I mean, it's probably safe to say it's always to the downside. And anyway, so that's next trip, 133.5. I think it's a great price, but you know, we got one more week of August for sure. And then we've got to get September, October, November. I assume next trip will exercise their 1 month delay. So it's probably until revenues show up and as meaningful numbers, and they take steps to eliminate Lind, there's going to be this churning. So, but I would keep it on the list as something to opportunistically build a position in. All right. I don't know what else to look up. Oh, Railtown. Wow, Railtown closed at almost 27 cents. Railtown closed at 26.74. So was it T. Alex yesterday? He was right. I said she. I haven't well, I don't know. Never see her that often, but there's an Alex I care about very much, and it's a she. Anyway, the volume in US of A was 104,800 shares. The high on the day, it doesn't seem to show that. Oh, there it is. It closed on the high, 26.74. And I would say this is a turn definitely in the stock at 26.74. I'd like to see more volume to be able to say that's it. But it's as good as it gets. That's a huge up day in Railtown, 26.74. And what T. Alex pointed out yesterday is you can no longer swap one share, 1 unit of Finger for 1 unit of Railtown. But if you wanted to see a sign that Railtown's about to go, I would say today is it. I'm not saying everything's straight up, but this is a really powerful signal that what this used to mean is the selling is tired and they've run out of shares to sell. But that's not true anymore. Or they just make shares up out of thin air and it's treated as if it's normal. and then the boo birds blame others for what they're doing. Um, yeah, I guess that we'll leave it at that to start out. Harbison, hello, William. Happy Green Day. That's a good, now I know what you meant. Happy Green Day. Justin Babish. Wow, Justin. Austin. Awesome. Not Austin. Awesome. Justin Babish. I forgot my boards over there. I forgot to add everything up, but I'll do that for tomorrow. Fast Eddie, how do you do? Giuseppe, hello, William. Hope you are settled in, rested, and back in the group. I'm I guess settled in. I was supposed to go to New York today. Um, I'll be going next week, it looks like, and um, we don't have to talk about it now, but I think there's good updates for everybody on the gold deal that many of us are in, and that's why I'd be going to New York. There's a possibility I might go to Nevada if I mean I'm out of cash, but if somebody, I have a friend that can give me her miles, um, but to go visit the principals of that. So that's all pending. But today, um, I would guess I'm rested, but I was out of whack today. But I got a lot done. Did a lot of work today, and but I appreciate it. I thank you, Giuseppe. That smooth groove. I watched the movie Michael on the plane last night. Um, I wish I could have heard it with better speakers, but it was pretty good. Speaking of smooth groove, Justin Babish, what? I see 26 closed for RT. What is William talking about? Well, I don't know. I'm bad. I'm bad. That's what I'm showing. This is Yahoo. That's what I'm showing. What time does it say? 3:59:06. 2674 for Railtown on Yahoo. 3:59:06 p.m. EDT. What it means to me, Justin, not that the markets are the way they were, but at some point this stock will trade like it used to be, that there will be a true price discovery. But what it says to me is somebody's buying it. Not obviously not huge amounts. That's why I would love to see 500,000 or 1 million shares in a day. But it leads to me to believe that maybe an institution or somebody that isn't bound by NDA is buying the stock. And I went through everything I could think of before I signed on here, just wondering if there's some news pending or a news announcement, and I don't see anything. But this is how it'll happen. Like I said, all of a sudden the stock will be up. You won't understand why. You'll be going, what? Why? I would posit that Monday the stock's up. You know, I don't want to jinx it, but I wouldn't be surprised to see 30 or 32 cents on Monday. I think this is the turn, and it can happen in August, and it can happen before we even understand what's going on. So I think it's great today. I'm bad. I'm bad. It's the only words I remember to that song. Hey, Donna. Hello, everyone. Hi, Donna. Justin Babish. Maybe he said finger was 22. It was. That, oh, why was I saying 22? That was finger. That's what I was saying. So you can't sell finger, one share of finger and buy one share of Railtown. But I would do it anyway. There's only one place finger's headed, and it's the turlet in terms of prices per share. And there's only one way that Railtown is headed. And I don't know, pick your favorite planet. It's headed there. It's going to go to Saturn. It's going to go to Jupiter. It's going to go to the next galaxy. Giuseppe, are you getting the next trip CEO on? Yes, I am going to. I noticed about an hour ago, no, a little longer than that ago. It's 5:50. I don't know. With this afternoon, I noticed that I received an email, and I didn't read it because I was in the middle of something else. But I am going to have Bill Kirby and Richard Marshall on, and we'll do a talk. We'll address in full the Lynn partnership financing, but I think it's like when you swipe your credit card because you need the money quickly, and then you take care of paying for the trip. Well, next trip you take paying for your trip or whatever you bought later on. You take care of it. So I really think they have a strategy that's going to limit. There's a million shares or a million warrants that Lind is going to get. So they'll have 5% of the company. And that million shares allows them on any given day, any given swing trade time frame or week or month to build up, or their clients to build up shorts during the day, nanosecond, zip, zip, bing, 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 bing. And they can build up this massive amount of shorts, essentially shorts. Reg show exemptions would be a better word. And then they can offset them if they get caught, well, short. They have this protection at 388, I think the price is. So that's in there. And that's the cost of the financing. Jeff Easton gets 5% of the company for being a swell guy. But that's our markets. That's the state of our markets now. And he and his clients get to purloin probably millions of dollars between now and when that note goes extinct. But hey, that's just how the markets work. There's no knight in shining armor coming to fix those markets. Oh, Lord, my God. Catherine Moore. How did Canada win World War II? I don't know. I was when I lived in London. One of my friends would always, if I did something stupid, or if an American did something stupid, or if there's a group of American tourists, he'd always say, "How did you guys blanking win World War II?" And he'd shake his head like, there's no way this country full of idiots won World War II. And I just remembered that, I don't know, on this conference, I sat with a really smart Canadian guy. Um, every his own people at the company were teasing him, and so I guess he got thick skin about it. But it popped in my head, and I said something like that at the table. You know, how did you guys uh, get through World War II? Because my whole point is, I think this government up there in Canada, under Carney, under the guy that's boinking a pop star now, Trudeau, and uh, the various woke strategies and uh, policies to make sure every outcome is equal. Every opportunity to have equality is not wasted. I don't understand how Canada gets ahead, but it's in a very narrow window. I think TELUS, I think TELUS had a head start on the sovereign AI factory. I think it was about 9 months ago they had the head start, and now I personally don't think they're going to be the first major success story in Canada. I think it's going to be Hive, Buzz, Digital, Bell Canada. So the amount of dawdling and committee meetings and uh, making sure that nobody's feelings are hurt. That's how just the consensus. It's hard to lead and win at anything if you have to make sure there's consensus inside your. Maybe it works for countries. I don't think it really has, but I'm not sure it works when you're trying to create a new industry or a new country, a new technology. Sorry. Um, that's so. I was just I'm really teasing because obviously the Canadians are the best people when you're traveling. There's nobody nicer than a Canadian at all, and uh, Australians are pretty good, but nobody beats Canadians as um, fun to be around and smart and capable. But I'm just teasing along those lines. Why does it take so long for TELUS to actually follow on from the publicly announced relationship with Railtown? Why? That was November, December of last year, and here we are, almost September. That's it's mostly out of frustration that I'm saying it, but it's just teasing. Um, I don't think Canada won World War II. Uh, it's arguable whether the United States would have won World War II if the Soviets hadn't absorbed so much punishment, and they effectively, what's it called, the Wehrmacht? They effectively annihilated the army. Leaving voicemail. All right. They effectively, the Soviets probably should be given the credit for winning World War II as much as the United States. And then when you look at what happened in Midway, there was some chance involved there. So I don't know. Anyway, it's a bad it's a bad attempt at humor, and it's an expression of frustration that the government of Canada, with all this money ready to go into AI, the provinces, TELUS having a head start, Buzz 8 Hive being emphasized by Dr. Tom Core, and still we sit waiting, waiting, waiting. But I wrote that. I wrote that in jest. No, nothing particularly mean meant by it. Oh Lord, my God, eyes I keep getting all these tings today. Anyway, Catherine, I hope it doesn't offend. It's all in jest. Donna M, way to go, Justin. Yes, sir. Giuseppe, cool. Looking forward to hearing them explain how they will escape the Lynn grind. Perhaps worthy of a small entry as we get past Labor Day. Yes, I'm gonna try to get them on this weekend or first part of the week. I believe that Next Trip is an opportunity to be purchased, but I think anyone buying Next Trip has to get comfortable with, number one, the price is probably, as I said, what, 2 weeks ago, 3 weeks ago, I think the stock was $1.60 or $1.55. And I've told them in my phone calls, they're definitely going to, I like your word, grind. They're going to grind that stock lower. But that's their short-term goal. That's not a fundamental story. And building a position when others are selling for their own reasons allows you to have a strategy maybe 6 months to 9 months from now, or maybe 12 months from now. Look, the numbers that I understand on Next Trip, and he said it, Richard Marshall said it, or I'm not sure he said it. I asked the question, could, well, that's not how I asked it. There's another company, I think it was called Flora or Fora, that's worth $2 billion. And I said, is that where Next Trip could be headed? And I think the answer was, well, we could be headed to $1 billion. Well, not assuming that he was guaranteeing that in any manner, but if you just use a round number of $1 billion as a target market, corporate valuation, enterprise valuation for Next Trip based on metrics similar to Fora, and if, as they said on an earnings call, they intend to limit the number of shares to 20 million. Now, those are two wild ass guesses. But if it's $1 billion in valuation, it's 20 million shares. Let's say it's 9 months, a year from now, year and a half from now, end of 2027. Well, $1 billion divided by 20 million comes up with a target of $50 a share. So in that kind of time frame, if those numbers are even close to credible, and that's what we have to get comfortable with, buying the stock at 135 or at 175 or at 250, or if they get it down to 125 or even down to $1, because they're going to keep, the machines will keep rolling. They'll just keep going. But they're just, remember, their goal is very short term. They want half a penny, a quarter of a penny, a tenth of a penny, 1,000 times in a millisecond. And they're just, or whatever, but they're just quite short sighted. They don't care about the fundamentals. They don't care if the stock's $50 in a year and a half. That doesn't enter into their strategy at all, because their strategy is an algorithm judging how the stock's going to move in the next blink of the eye, probably more quickly than that. And their profits all live between the bid and the ask as they drive it down, and they have the right, because of your Congress and your presidents, they have the right to sell stock that doesn't exist multiple times during the day, multiple times during the week and month, and they can hold those shares. They can do it offshore. Nobody tracks it. And they can do it in a scale that they directly affect the price. So effectively, they can establish a short position and then pile on the sales to create their own profit. And if you've got a document with Lynn Partners, the hedge funds doing this know that they have a little bit of protection if it goes out of whack like AME did. It's a strategy, and Congress goes along with it. The SEC goes along with it. Bill Clinton's time frame, they made it legal partly. So that's just what we got to live with. But we got to find stories or fundamental ideas that can survive that and then thrive at much higher levels. And like I already stated, if NextTrip hits targets similar to this one comp for a travel, you might have a $50 stock. Again, you have to be willing to hold it, and you have to be willing to ride that out. So anyway, I think that's the opportunity. But it's not going to be pleasant if you look at the stock every day, because I think the machines have every incentive to drive the sale of non-existent stock at any point that the price goes up, and drive it downward to try to profit. The only thing that will stop it is if institutional buying comes in using algorithms, using computers, using the same programs to, instead of pressure the stock price down, the buy computers are trying to buy at the best price without showing that they're there. But the two AI programs, the two computers, recognize each other, and it's a bank of computers. So the whoever's selling stock that doesn't exist on behalf or because of the Lynn deal start moving away. They start moving their box upward, or take the box, as Amy Whitehouse might say. They take the box upward, and that'll come, I think, with NextTrip. But yes, I'll have them on. I think it's an exciting opportunity to build a position. And maybe if Railtown moves before NextTrip does, we can build a significant position. Donna M., Railtown was up 8% at 355. Then the next time I looked after 4, it went up to 35%. Yes, that's how it happens, Donna. And because it closed on the high, my read, there's an order in there. There's an order in to buy the stock. And I bet it goes up Monday, Tuesday, Wednesday next week. But that's a guess. I mean, that's a guess. And if it doesn't go up, don't be worried. This is a good sign, Donna. Ward Richardson. Cinchi has 3 primary partners, Gainsight, Intercom, Gong. Their combined ecosystems span well over 800 app integration, cloud pipelines, financial, and a string of consulting channels. And Cinchi is one of the companies that just came in to the AIP partnership. Let me go down to Ward Richardson. Represent 36,000 corporate customers across the global enterprise ecosystem. That's pretty massive. It's pretty massive. Pretty massive. AI Extreme. Do you think Tony becoming a customer of Railtown and his 2 videos driving business to rail might have anything to do with the price bump? Well, I guess there's nobody better at due diligence than Tony Dinero. The guy has recommended AME or C for the last, well, how many years? No, I don't think it has anything to do with it. He's a small customer, if he is a customer, and driving business to him. I don't know. I haven't seen his videos, but it might. It's how things catch. They get viral. I think it might be what Ward's talking about. It's that a company like Cinchi using Railtown is getting out to a lot of developers. So no, I wouldn't particularly think a guy that goes into is always in the hottest stock out there. He didn't find Railtown. He was after me. I don't care. But he's just here because there's volume here. And I've already explained who and what I think he is. I think it's all to make you comfortable so that when he tells you to sell Railtown, you'll listen to him. But we'll see if I'm right. We'll see if I'm right. He's not going to let you own Railtown. I mean, it's not like he can control you, but as soon as it's $1 or $2 or $3 or even $5, he's going to say, well, it's time to rebalance our portfolio, diversify. We should be over here in this great stock, AME, because it sells movie tickets. So you follow Tony at your own peril, I think. But no, I don't think the reason the stock is up has anything to do with Tony. I think some institution somewhere has put some orders in, and the stock price has gained purchase, and the algorithms they moved away from the ask because they recognize there's a buyer in there. That's what I think's happening. But if you want to credit it to Tony, that's fine. Hopefully when the stock goes up, the company will give him a lot of publicity and make him a hero. And maybe this audience can go listen to him and follow his next stock idea. I don't know what your point is, but I really don't think has anything to do with the price going up today. Catherine, let's see what Catherine says. Catherine Morris, you have me laughing as you have stated the state of my country so well. Yeah, exactly. It's, what it is? It's a luxury. It's an indulgence to be able to act that way. But we're experiencing it now in New York and California and in a lot of our institutions too. But what gives you such great hope? What gives one such great hope? You visit a place like Texas. My gosh, I wanted to look up two things. Let me see if I can. How big is Texas? Texas. Versus countries. So let's see what it says. I mean, okay, so Texas has an estimated gross domestic product of 2.9 trillion. Texas ranks as the 8th largest economy in the world if it were an independent country. Its economic output surpasses major national economies, including Russia, Canada, Italy, South Korea, and Australia. And when you go down to Texas, which is not woke, and by the way, there ain't no racism that I see in city after city, situation after situation. But maybe I'm blind to it, but I don't see it. Um, but it gives you hope that the United States, at least, has pockets of ability to have production and get things done. Um, so Texas is bigger than Russia, bigger than Canada, bigger than Italy, bigger than Australia, bigger than South Korea. And it's the second largest state economy in the United States behind California. All right, the other question I wanted to ask, how big are Texas oil reserves, production, produced, and remaining versus Saudi Arabia? Obviously, the Saudis are going to be much bigger, but it's just interesting to compare. If Texas were an independent country, its daily crude oil production would rank fourth in the world at roughly 5.75 million barrels per day. Wow. A guy pointed out to me, a guy that I was with in Denver, the acreage in the Permian, at least on a transaction, according to the president of Netherlands Seoul at one of the breakouts, over $300,000 per acre. And this is why, because it's producing so much. So Texas produces 5.75 million barrels per day, just behind Saudi Arabia's 9.5 million barrels today, while holding over 60 billion barrels in recoverable shale reserves compared to Saudi 267 billion barrels. I think Saudi's reserves are exaggerated, but maybe Texas's are as well. Saudi production is 9.5 to 9.6. Texas has cumulative historical production of oil of 75 billion barrels or more. And Saudi production over the last, I guess, 100 and some years is 150 billion barrels. So Texas is up there. It's not as big as Saudi Arabia, but Texas is big. So here's global oil production in the world, and you see Texas is number 4. It starts United States, the new United States, 13.58 million barrels of oil produced a day. Russia, 9.87 million barrels produced per day, 2025. And then Texas slides in there at 5.75. Canada comes in 5th, but if you leave Texas out, Canada came in 4th at 4.94 million barrels a day. Iraq came in at 4.39. China came in at 4.34 million barrels of oil a day. That's more than I thought. Then Iran at 4.19, the UAE at 3.82, Brazil at 3.75, Kuwait at 2.58. And then, believe it or not, New Mexico, of all provinces, would come in at 2.24. They'd be the 12th largest country of production. But Kazakhstan came in at 2.07 million barrels of oil a day. And our Gulf, whether you call it Mexico or America, 1.9. And then it's Norway at 1.85, Mexico at 1.72. You've got to believe Mexico could produce more oil. Nigeria, 1.61. Libya, 1.36. Qatar, 1.31. And then 20th in the world would be North Dakota at 1.15 million barrels of oil a day. Colorado would come in 34th in the world. Alaska comes in at 36th in the world. They produce 420,000 barrels a day. And that same group I sat with, they're aiming to have that kind of production just out of their acreage in Alaska. But it'll take 13 years to get it going. Oklahoma comes in at 37, Wyoming at 38, and California at 39. California could produce more. Utah comes in at 44th in the world, and Ohio comes in at 49th. And with all these states intermixed, the 50th country is Chad, and they produce 130,000 barrels of oil a day. That's interesting. Anyway, I'm not sure anyone else was interested in it. But thank you, Catherine. I'm glad you didn't get mad at my comments. Pat M., hi gang, Ward Richardson. Gong is a major hitter with big tech alliances and Microsoft. Gong has a deep core partnership to integrate its revenue AI graph directly into Microsoft's 365. Ward Richardson. So they get into Microsoft 365, Microsoft Teams, Outlook, and Azure. T. Alex, hi RT investors. Ward Richardson, AWS, Amazon. Gong runs its core platform on AWS and relies directly on Amazon Bedrock to access powerful foundational LLMs. This infrastructure allows Gong to transcribe, analyze, and track millions, Ward Richardson, of complex enterprise sales conversations seamlessly. T. Alex, I give your homework a gold star, Ward. Ward Richardson, Cinchi's strategic engineering positioning is entirely structured around NVIDIA's enterprise architecture. NVIDIA utilizes Sinchi's Paramind as a foundational critical guardrail for NVIDIA's AI enterprise ecosystem. I give you a blue star and a red star and a gold star and a green star. All right, let me see where I left off yesterday. Somebody's saying that I picked finger motion. I don't know. Have I been clear enough on my recommendation to sell finger from 550 a share? So if you're gonna criticize me, at least get it right. I think the reason Ham barely speaks to me is when it was 550 a share, I said sell it, and I've been saying it since. All right. So I asked yesterday about Total Metals, any news, etc. Recent news and catalyst for Total Metals. Total Metals has been actively putting out news recently, heavily focused on advancing its exploration properties. Just yesterday, August 19th, the company announced highly positive assay results from its initial mapping and grab sampling program at its Menary high-grade gold project in Ontario, up next to Catherine. So the highlights of the announcement, high-grade gold samples, the grab samples returned excellent gold values, including up to 31.7 grams per ton gold, and 9.61 grams per ton of silver. No, sorry, that's also gold from different zones on the property. They talked about drill preparation. Management stated they are leveraging these results to define precise, high priority targets for an upcoming drill program with permit preparations currently underway. So that's why I think Total Metals is in a great accumulation price range. And then they talked about their electrolode project. Earlier this year, they also reported high-grade intercepts, including 38% zinc and 3.5% copper from their winter drilling program at the electrolode critical metals project. Will the drilling program help? Absolutely, but in a specific way. For a pre-revenue junior exploration company like Total Metals, the drill bit is their entire lifeblood. The catalyst engine, because they have no actual sales or earnings, the only way to drive the stock price higher is by proving there are economically viable high-grade minerals in the ground. The upcoming drill program at Menary, and there'll be further work at Electrolode, will serve as the primary upside catalyst. Exactly. The goal. If the drill hits continuous high-grade mineralization, it validates their geological models. This increases the overall implied value of the property, which can either attract a buyout from a large miner or allow them to raise capital at a much higher stock price. If they drill dry holes, however, the stock will likely be heavily punished. Well, yeah, that's the. But these are former Goldcorp guys, and I think they know what they're doing. And I think it's a big enough program. If one well doesn't work, it's not going to condemn the whole project because they'll have other wells going. Do they run into a cash need or raise soon? I asked that question. Yes. A capital raise in the near to medium term is highly likely. The cash runway at Total Metals is $6.5 million to $8.9 million in cash and zero debt, no debt. Well, that sounds decent for a micro cap, which is valued right now at $8 to $11 million. Their trailing 12-month free cash flow has been severely negative, estimated at a cash burn of 6.6 million to as much as 11 million Canadian. They were acquiring properties and they're drilling, but yeah, that's the thing with Total Metals. They're probably going to raise money into a rally. That's why I recommend trying to sell a third or half of your position in this case and let the rest ride. The 1-year warning. Recent market analyses flagged a major risk for the company. Based on its current free cash flow trend, Total Metals is operating with less than 1 year of cash runway. Acquisition commitments. When they acquired the option for the Menery property late last year, they agreed to a structure that requires ongoing cash payments alongside share issuances over a 4-year period to earn their 100% interest. The bottom line, drilling programs are notoriously expensive. Yes, they are. To fund the upcoming Menery drilling and to keep the Electrolode project moving and cover corporate overhead, Total Metals will almost certainly need to raise capital over the next 6 to 12 months. In the junior mining sector, this is typically achieved through private placements, new shares, which does introduce dilution risk for current shareholders. And again, you have to go, what does dilution mean? If you're using it to drill and discover an asset worth many dollars per share, it's hard to call that dilution. But in the strict sense of adding more shares, yes. Their goal is to get exciting drill results before they have to raise, as ever, so they can issue those shares at much higher prices. Exactly. And in a mining company, it's I don't know if you use the word volumetrics, you use that in oil and gas, but it'll simply be a matter of taking the grade or the average grade or a more sophisticated analysis and multiplying it by how much the estimated resource is and coming up with how many ounces of gold there are, and then you come up with a price per share, and the stock can move dramatically upward. So I had logic in my question. Management wouldn't spend millions of dollars firing up drill rigs if they didn't have strong geological reasons to believe the gold is down there. The high-grade grab samples they just reported are exactly what gives them that confidence. But in junior mining, thinking it's there, those are my words, and proving an economic deposit exists, I guess those were my words, are two very different things. Here's what the drilling phase says and why it's necessary and why it's risky. Regardless of confidence. One, grab samples are cherry picked. Well, not necessarily, but okay, you get what you see. When geologists do grab sampling at the surface, they are deliberately looking for the absolute best, most mineralized rocks they can find to prove the presence of gold. Okay, fair enough. Finding a rock on the surface with almost 32 grams of gold per ton is fantastic, but it only tells you about that specific rock. It doesn't tell you if that rock is part of a massive underground vein system or just a tiny isolated pocket of gold that barely goes 5 feet deep. Fair enough. The drill is the truth machine. I didn't use that word. Surface data like soil samples, grab samples, and magnetic drone surveys gives you a 2D map of where to aim. The drill bit is the only way to build a 3D model. So you get true width and depth. Drilling proves how deep the gold goes and how wide the veins are. 10 meters of continuous 5 grams per ton gold underground is often far more valuable to a mining company than a single 30 gram per ton rock found on the surface. Continuing, how do you say that word? Continuity. Continuity. Continue to pretend my life will never end. Continuity and community and exceptionality. And anyway, continuity. The biggest reason drill programs fail is a lack of continuity. A drill might hit a spectacular grade in hole 1, but if holes 2 and 3 right next to it come up dry, the deposit isn't viable to mine. It's not a blanket deposit. So that's what this drill bit is going to be all about. So the harsh math of exploration, the reality of the junior mining sector is that failure is the default state. Even with the best surface data in the world, the majority of exploration drill programs do not result in a commercially viable mine. Management drills because the payout of being right is astronomical. Often a massive buyout from a major producer like Barrick or Newmont, which I think is what's going to happen to your gold company in Nevada, by the way. But the odds of hitting a continuous mineable deposit are often cited as being less than 1 in 1,000. They are drilling because the surface clues at Menery are highly encouraging. I think there's also more to it. On the presentations which we went over, there's also closeology. I hate that word, but there are nearby drill results that give them something to compare it to. But until the drill core comes out of the ground and the assay lab proves the gold continues at depth, that 6 to 9 million in cash they are holding is burning quickly on a geological gamble. I think that summarizes what mining's about. All right, so then I asked about Railtown. It was around 23 cents yesterday, and I was asking, it seems stable. It seems like it's getting ready to perform. And this is the answer that came yesterday. So it's stabilized and formed a base after bouncing off its 52-week low of 20 cents in late June. The stock has effectively found a floor. This is Railtown AI technologies, but it is waiting for a real revenue catalyst to break through the ceiling. Here is a look at why it is holding firm at these levels and what needs to happen to Railtown AI Technologies to push its stock price higher. Why the stock is firm. The number one reason, a strong treasury. Unlike many micro cap technology or exploration stocks like the ones we were just discussing that are constantly staring down the barrel of a cash raise, Railtown AI is surprisingly flush with cash right now. And I would imagine they're going to start producing revenue based on the WSI contract, where they're going after the small and medium sized enterprises in Canada. Warrant injection. In late June 2026, Railtown announced it had received nearly 3 million Canadian in gross proceeds from the exercise of 11.5 million warrants, which does not change your net cap table. Previous backing. This cash comes on the heels of 3.5 million almost private placement by prominent backers, including BlackBerry co-founder Mike Lazaridis. The result, this massive influx of capital removes the immediate threat of desperate, highly dilutive capital raises. Investors know the company has a sound treasury to fund operations for the foreseeable future, which is why Railtown stock price has stabilized instead of bleeding out. A bleeding seabird flavor. The pivot. Railtown has spent the last couple of years building the plumbing for AI agents like their rail engine ingestion tool and conductor observability platform. Their grassroots initiatives have driven over 35,000 downloads of their developer kit. Now they are shifting entirely toward commercialization, and that was just announced in July. Here it is. In July 26, they launched a service-led commercialization strategy targeting Canadian small to medium enterprises. Railtown budgeted an initial $500,000 for the back half of 26 and brought on a global marketing firm, WSI, to run a national go-to-market campaign to secure actual paying customers. I think this is a big transformation that you're watching live. 3, the catch. The nominal revenue reality. That's true. The reason the stock is hovering around 20 cents is rather than reclaiming its 52-week highs near 64 cents, comes down to a reality check. The same stuff over and over again. In February 26, there was a regulatory review by the British Columbia Securities Commission. Railtown had to issue clarifying disclosures regarding many of its past press releases. And I saw that as cleaning the deck for good news, but this is the negative spin on it, that somehow those announcements were puffery. I don't think they were. They had no choice but to announce it. So you can't win for losing it up there in Canada or down here with the regulators. They make you announce it, otherwise you're not meeting Reg FD. And then when you do, they ask you to clarify it after the fact. So the company clarified that several of its highly promoted, I don't know if they were highly promoted, they were announced, I'm not sure they were heavily promoted, partnerships and service agreements were actually non-binding MOUs. And non-binding MOUs, it said so in the news announcement, so come on. memorandums of understanding. More importantly, they confirmed that definitive commercial deals were still pending and that they had only generated nominal customer revenue. Well, we all knew that. It's not a surprise. But anyway, let's keep going on it. All right, I moved on to Canadian oil stocks. Which ones have run this year? Several Canadian oil and gas stocks have experienced massive rallies in 26, driven by a combination of strong operational performance, strategic acquisitions, and favorable commodity pricing environments. Here are the most notable Canadian energy stocks, which have surged from their lower valuations to impressive highs this year. Tenaz Energy, TNZ. It's been one of the biggest multi-bagger breakout stories in 26. So it's happening with oil in Canada. I think it can happen with gold companies, hence my fascination with microcap miners like tttmf. So anyway, what happened with Tenaz, the surge? The stock was $26 at the beginning of this year, and it skyrocketed to over $60 by August. In our world, that no one would be impressed with a double. But markets are impressed with 100% gains. We're the only group out there that expects thousands. We don't sell when it's up 2x or 5x or 10x because we want more. We got to learn when we get profits to take them. A massive 130% year-to-date gain, and it's up over 160% over the trailing 12 months. Tenaz produces most of its natural gas in the Netherlands, with Europe continuing to face natural gas supply constraints because they idiotically go to war with Russia. Tenaz has reaped the benefits of highly profitable overseas pricing. Cenovus Energy, CVE, it's doubled. Again, we're never happy with the double, but the markets are happy with doubles. CVE, Cenovus, surged past $45 Canadian, logging a massive gain of roughly 100% over 12 months. The company has operated incredibly efficiently following past production challenges. And then Suncor Energy, SU, Canada's integrated oil giant, has staged a powerful comeback. Canada's energy business is booming, moving from a previously depressed valuation to multi-year highs. Suncor climbed to over $94 Canadian in August, reflecting a gain of roughly 78 to 90% over the last year. Like Cenovus, it experienced a massive breakout in July, rocketing up 23% in a single month. This is normal outsized returns when you get them investing, not 5x, 10x like these crapshoots give us. And then we didn't, and I include myself in it, by the way, we didn't take our profits when there was a gift right there. Suncor is currently in the midst of its best operating cycle in history, hitting record upstream production and refining throughput. Management's pledge to return 100% of excess funds to shareholders, which, by the way, when you buy back shares, it helps shareholders, but it helps management get massive payouts too. So all of this, though, has driven what? Massive institutional buying. And that's what we need to see in Railtown and in Total Metals and in Nextrip. We need to see institutional buying. Then the computers will go away and play another day. Oh, we already did that one. So that means we did that one. Did we do this one? Yeah, we did that one. Might have done this one. Yeah, we did Suncor. Then there's Vermilion Energy. Vermilion has seen sharp, rapid price appreciation recently, making it one of the top performing dividend paying energy stocks of the summer. The stock surged 26%. And see, everybody gets excited by that, but we don't. We have to learn to recognize that some of our gains were truly exceptional. And it's trading around $17. Similar to Tanaz, Vermilion benefits from having diversified international assets. Then there's Journey Energy, Joy. It's the prime example of a small cap energy stock capable of quick, explosive moves. The surge. After trading at lower valuation, the stock recently spiked over 7% in a single day, pushing to $6 Canadian. The sudden jump was triggered by highly profitable earnings report, an expansion of their capital program, and a strategic $28 million asset sale to redeploy cash into their Duvernay drilling program. The takeaway, the unifying theme behind these 26 energy surges is capital discipline and cash flow. The market is aggressively rewarding companies that are not just drilling for the sake of it, but are generating massive free cash flow. That's the metric in oil and gas is cash flow. That's what everybody looks for. The accountants can't mess with cash flow. So I asked about microcap. Usually the gains and volatility are driven by sudden production increases or high grade drill results rather than broader macro oil trends. So one of the stocks, almost $1, Colacanth Energy, and it's been one of the most heavily watched junior oil and gas stocks of the summer, trading in the 77 cents to 96 cents Canadian. After hovering at lower valuations while developing their assets, the stock has seen a massive surge of institutional and retail interest in 26. And I think Canada has better junior markets than the US. The catalyst, they successfully transformed from a purely speculative exploration company into a rapidly growing producer. In early 2026, they reported an incredible 8-fold year-over-year price increase in production, hitting an average of 6,000 barrels of oil equivalent per day in Q1. And that went up to 8,000 BOE per day in March. The war chest, they are sitting on a massive contiguous land position in the Montney Formation and recently closed a major $80 million bought deal, equity financing in May. Prospera Energy. If you're looking at the low end of the penny stock spectrum, Prospera currently trades at 3.5 cents to 5 cents Canadian. Because the share price is so tiny, a move of a single penny represents 20 to 25% gain, making it a high torque trading vehicle. The stock frequently experiences double-digit percent spikes, such as a recent jump. The company is executing a heavy oil reactivation strategy in Saskatchewan. Even just this week, they announced that their turnaround is working. They hit record quarterly revenue of 6 million Canadian in Q2, and achieved an operating netback of roughly $30 per barrel. They are proving they can extract oil profitably from older bypassed wells using updated pump technologies. Arrow explanation, the junior breakout. Arrow is another junior that started as a small cap penny stock and has experienced a massive multi-year run as it proved out its reserves, currently commanding a market cap of 142 million Canadian. Unlike many Canadian juniors who only drill in Alberta or British Columbia, Arrow focuses on high-yield oil properties in Colombia alongside Western Canada. The results, recent drilling successes at their Colombian fields, the Tapir block, have hit massive multiple hydrocarbon bearing intervals. They reported Q1 26 revenues of 23 million whilst remaining completely debt free. The difference between a large cap like Suncor and a micro cap like Coelacanth or Prospera is that the juniors are entirely dependent on the drill bit. Suncor goes up when oil and gas prices go up. Then I asked about Saturn Oil. I was told that was a good one. Saturn Oil is an excellent example of the Canadian oil surge. They have been incredibly strong this year. The surge, they started under $2 US on the over-the-counter markets. By late May, they were pushing above $5 US, and today they're trading around $4.53. It's a massive gain of over 150% year to date, making them one of the standout performers in the Canadian oil patch. And the couple of things there, these are real investment, strong returns. We get so spoiled. We get a G bucks if it was, or one of them that we buy in at 70 cents. It goes to 12 pre-market. It opens in the $8 range, and that's not good enough for us. That's 10x. That's trading. You just take it. Now, I don't believe that's what we should do with Railtown, but I think if you're listening to someone trying to get you comfortable that he's doing all this, he's on the side of the company, you'll find out. You'll find out. I have a different view, but if you want to follow him, he's not going to pay the price, you are. So why is it running Saturn? They've beaten expectations. They're acquiring new assets, and they're throwing off a lot of cash. For the 8th consecutive quarter, Saturn beat its own production guidance, averaging over 41,000 barrels of oil equivalent in Q2. Massive free cash flow. They generated 82 million in free funds flow, 46 cents per share. Aggressive acquisitions. They've been making tuck-in acquisitions in the southeast Saskatchewan. They've raised guidance. Saturn is currently in the sweet spot for mid-tier producers. They are big enough to generate massive cash flow, but small enough that smart strategic acquisitions can still drastically move the needle on their production numbers. So I asked about what I showed you yesterday, this IEA 2030 oil demand forecast over here in the yellow. This came from Goldman Sachs, but it was part of the APA Corporation, it used to be called Apache, presentation. And by the way, I still love APA. I think it's a great company to own. But just since 2021, the net zero emissions target that they gave in 2021, the IEA, they were saying we need roughly 70 million barrels of oil a day. But all of a sudden, less than 4 years from now, they're calling for demand of 105.5 million barrels of oil. And down here, look, they're looking beyond shale. The institutions are and big companies are. And they want durable, lower risk supply. But anyway, I put that up and I asked about it. As highlighted, the EIA's revised 2030 oil demand forecast of 105.5 million barrels per day reveals a massive 33.5 million barrel per day gap compared to their 2021 net zero emissions scenario. The 2021 projection assumed a rapid utopian transition away from fossil fuels that simply did not materialize, made up in some classroom up at Harvard. Instead, demand projections have consistently been revised higher to align with the reality of global consumption, effectively forcing agencies to walk back from their earlier estimates, which I would imagine are driven by young graduates of the best schools. So the looming supply squeeze, while demand is marching toward that 105.5 million barrels of oil per day by 2030, that's 4 years. Your concern about the supply side is exactly what this presentation emphasizes. The industry math points to a severe structural deficit of supply of oil. The industry has been starved of capital because these young, woke, highly educated, smarter than you are, young adults come out and tell the world we're not going to need oil and then act on it. So the industry's been starved of capital. Global exploration spend has plummeted 60% compared to just over a decade ago, severely starving the pipeline for future production. There's depleting reserves. The industry's proved reserve life is down 25% over the last decade or so. The treadmill effect, even with zero new exploration, projected global oil production is expected to naturally decline by 4% per year. Does this end in tears? That was my question. If ending in tears means a violent supply squeeze and massive price spikes, it is highly plausible as a scenario. The geopolitical premium. The IEA itself acknowledges that recent global events sharply highlight significant geopolitical risks to oil supply security. War and sanctions have forced the rerouting of global trade and strained international supply chains. The maturing base. With U.S. shale maturing, the industry is increasingly focused or forced to look at traditional long cycle exploration to replace reserves. These projects take years to develop and cannot be brought online quickly. The demand reality, the global economy remains heavily reliant on oil for transport, petrochemicals, and basic infrastructure. If global demand hits 105.5 and the industry has not deployed the capital required to offset decline rates, the arithmetic dictates a painful global energy squeeze. I think it's good to be long oil. So here's the question that I put you through all that Canadian stuff. I said I like Apache, but all of the majors will do well. I am intrigued that capital markets in Canada are funding micro and small cap oil companies, and it's still not happening here. You have hit on one of the most fascinating structural divides in global energy markets right now. Fascinating. The contrast between how the Toronto Exchange and the Venture Exchange operates compared to US capital markets is staggering. And it perfectly reinforces that APA slide about the collapse in exploration spending. Here is why Canadian capital markets are still breathing life into micro and small cap oil, and you can apply this to AI, while the US has effectively shut the door on them. The Canadian ecosystem is built for juniors. Canada has a deeply entrenched structural ecosystem designed specifically to incubate resource companies. The TSX Venture, unlike the NASDAQ or the NYSE, which are geared toward technology and large cap industrials, the TSXV was explicitly built for junior mining and oil. The entire financial ecosystem from boutique boutique investment banks in Calgary, like Peters & Co. or 8 Capital, to retail investors and specialized analysts, the entire financial ecosystem understands how to value a $20 million company with a few good wells. There's also tax incentives, the flow-through shares, which is unique to Canada. The Canadian government allows resource companies to issue flow-through shares. This lets companies pass their exploration expenses directly to investors who can deduct them from their personal taxes. It effectively subsidizes the risk of funding early stage drilling and exploration, keeping the capital flowing to the micro caps. And then there's geological accessibility. In places like Saskatchewan or the shallow conventional plays in Alberta, a junior company can drill a well for $1 million or $2 million. A 10 million equity raise actually buys a meaningful drilling program to prove a company's thesis. In the United States, the barrier to entry, the big one, is the Permian Shale. And I already told you that some acreage at the Permian Shale is going over $300,000 an acre. In the United States, the shale revolution, specifically the Permian Basin, changed the economics of the industry in a way that crushed the small player. Well, for now. The cost of entry, a modern deep horizontal Permian well can cost $10 million to 15 million or more per well. To drill a multi-well pad, you need $50 million. A microcap simply cannot raise that kind of capital in the United States without massive toxic dilution. U.S. shale is a manufacturing game that requires massive scale, midstream infrastructure, and continuous drilling to offset steep decline rates. The death of private equity in the United States. A decade ago, U.S. private equity firms would fund small management teams with $50 million to go prove up a few sections of land and then sell them to a major. I'm trying to work on a project like that. Today, ESG pressers, ESG is wokeism. Wokeism is everywhere. When you go woke, you might go broke, but at least everybody goes down with an equal title. And poor historical returns have caused PE, private equity, to largely abandon the small cap E&P space. That's changing. I saw a lot of interest, but it's still early. It's still early. Wall Street's ultimatum: consolidate or die. U.S. capital markets have fundamentally changed how they reward oil companies. Investors were burned by the growth at any cost shale boom of the 2010s. That was cheap money, and it was predictable, but no one was listening. People don't listen when there's a mania going on. Where companies borrowed heavily to drill, destroying capital in the process. That's right, because it was a hamster wheel. Today, Wall Street refuses to fund U.S. exploration risk. That's the opportunity, particularly if you can find a project that doesn't have any exploration risk. They demand free cash flows, share buybacks, and dividends. Because U.S. markets won't fund small caps to explore, the industry is eating itself. Instead of exploring, the majors are just buying each other to replace reserves. Exxon bought Pioneer, Chevron bought Hess, Diamondback bought Endeavor. And those are all three great companies: Exxon, Chevron, and Diamondback. This brings us right back to your read on the Apache presentation. If U.S. capital markets refuse to fund the juniors to go find new oil, and the U.S. majors are just buying existing production rather than drilling wildcats, the global reserve replacement ratio will continue to plummet. Our sales would plummet. Canada is one of the only places left actively funding the farm team of the oil sector, which strongly supports the thesis that a severe structural supply squeeze in oil is brewing. And you know what it means? Higher prices. All right, I have some things to go over about Railtown, I think, but let's go to your comments. Let's keep going with your comments. Okay, Ward Richardson has more to say, and everybody should listen to what Ward says because he has a PhD in AI. He wanted to get a PhD in gender studies, but I had to really talk him out of it. One, RT will capture, Railtown will capture the 1,000 plus elite corporate buyers running the actual data centers. Ward Richardson, number two, Railtown automatically will capture the data traffic of 3,000 plus independent software companies who build their apps on that system. So we jumped in the middle of his point. Let's start up here again. Ward said Cinchi's strategic engineering positioning is entirely structured around NVIDIA's enterprise architecture. And then Ward went on to say NVIDIA utilizes Cinchi's Paramind as a foundational critical guardrail for NVIDIA's AI enterprise ecosystem. Remember, Cinchi, I think, was the 200th company, or maybe the 199th, added to Railtown's AIP partners. Then Ward went on to say, number one, Railtown will capture the 1,000 plus elite corporate buyers running the actual data centers. And Ward says, number two, Railtown automatically captures the data traffic of 3,000 plus independent software companies who build their apps on that system. And then Ward Richardson says, number three, Railtown instantly collects an under the hood slice of the processing volume from tens of thousands of downstream companies using those apps daily. And then Ward Richardson says, India's technology. India's tech hubs and developer communities have placed a sharp focus on rail engine software. It's a big country, India. Ward Richardson, T. Alex, thumbs up. G. Diddy, G. Diddy, G. Diddy, G. Diddy. Great job, Justin Babish. Yeah, Justin, that's a great position. That is an incredible position, Justin. It's good work too. You've been diligent, Justin, over the last months, and I know you've done it a few shares at a time, but you took full advantage of while the stock was down. And that's the strategy. If you understand the fundamental story, but you also understand the mechanics of these machines and these grim reapers, you can build a position. It's awful looking at the stock price every day. There's no instant gratification. There's no instant karma. Ward Richardson, Cinchi has put Railtown front and center on a global map in the software industry. That's a big statement. And I'd like to see if I can find some research, but that's a big deal. Maybe Cinchi is now going to be the company that leads the awareness of Railtown, not a TELUS, not a Canadian government. Maybe Cinchi doesn't have quite so many committee meetings and they can actually do something. But to repeat, Ward Richardson says, Cinchi has put Railtown front and center on a global map in the software industry. And G. Diddy, please put, all right. That's what I would do if I had money. G. Diddy bought another 1,000 total medals. I think that's smart. Good job, G. Diddy. G. Diddy says to Ward Richardson, great research as always, Ward Richardson. Thank you for sharing. I agree. Is Pluto a planet? How would you rank the world wars in terms of intrigue? I don't know. I wasn't there. Um, I would say the best movies came out of World War II, if you ignore John Wayne's movies. And I would say the intrigue, human intrigue, exists in every war. Thank you for the question. Ward Richardson, G. Diddy, thumbs up. Ward Richardson, Harbison, have you sent your contact info to William? I have not heard from you. Ward, that's my fault. I didn't provide you guys. I could still have done it with my portable here. I'll do it, Ward. You and Harbison will meet. Unknown stuntsman late to the party. Hi, Uncle Bill and crew. I did buy another 20. Wow. Steve is stepping up. Good job. Total 40,000. Good job. That's awesome. Neil Gondek, thanks, Ward, for all your data sharing. Have a great weekend, everyone. And Ward Richardson says, Neil Gondek, thumbs up. All right, so I can go through. No, I got to go here. And I can get. What is that? Oh, not, I can't do that. All right, so here was most of an article that actually Ward told me about. And it's about Railtown. And it's India. The India AI Spectrum had an article at the beginning of this year, the 27th of January, 2026. This is in India. They had this announcement. Railtown AI launches Rail Engine for real-time AI agent workflows. Railtown has produced a platform that enables developers to build, deploy, and manage intelligent AI agents at scale. Railtown AI Technologies, a leader in AI developer tools and agentic frameworks, announced the launch of Rail Engine, its real-time ingestion engine, a core component of the company's end-to-end AI agent development platform. Railtown allows AI agents to ingest streaming data in real time, advancing beyond traditional batch processing to deliver richer, context-aware insights and responses across complex enterprise environments. Combined with Railtown's Railtracks Agent Development Kit and Conductor Agent Observability Tool, Railtown has produced a platform that enables developers to build, deploy, and manage intelligent AI agents at scale. Rail Engine provides agents instant access to context-rich, searchable enterprise knowledge, which enables developers to launch advanced RAG, retrieval augmented generation, workflows, and automation and agent runs while leveraging pre-built software as a service data connectors for seamless integration, semantic search, and intelligent automation. The Railtrax ADK offers developers a Python native framework to design, orchestrate, and deploy autonomous AI agents with pre-built integrations, execution tracing, and orchestration tools that support real-world multi-stage agent workflows. Conductor, Railtown's observability tool, provides developers and operations teams with end-to-end visibility into agent behavior, performance, metrics, resource utilization, and reasoning paths, enabling debugging, optimization, and secure, efficient deployments. Quote, with this launch, Railtown delivers a complete agent development platform from real-time data ingestion through agent creation and observability, said Corey Brandolini, CEO of Railtown. Quote, the platform equips developers with the tools to build agents that act on live data streams while giving teams the insights and controls they need to operate with confidence. This is a chart on Railtown in the United States. You can see the little bit of yellow I put over here. That, my friends, is a breakout. Now, we've had breakouts before in February, and in April, it looks like a little bit of one, and maybe in July. But I think this one has broken out in a strong way. I'd like to see higher volume. And this might be the one that is sustainable. We'll find out, of course. All right, this is Dr. Tom Core. He, like Hive Digital Technologies, has signed $600 million in GPU cloud contract value so far this year. And you see the numbers here. I think it's broken down here. So you have Bell, 30 million, 2-year, Cohere, 225 million, 3-year, and IG Hyperscaler, 350 million, 5-year. So total is 600 million. Is Railtown in there? Why is Dr. Tom Core putting these up? He put this up, Nazim Ben Hadid. I'd like to extend a warm welcome to Victor Dodich as our new president and CEO at TELUS. I'm excited for the next chapter and the opportunities ahead for our team. I wonder if up in Canada they're ever able to finish a book. Maybe they get through a chapter once in a while. To every TELUS team member, thank you for everything you've done to deliver for our customers. And here's a picture, I think, of Victor Dodich. Dr. Tom Core put up Hive Digital Technology, now has 860 megawatts of power contracted globally. Look at these countries. New Brunswick, Canada. I can't pronounce it. Lachute, Canada. Lachute, Canada. Sweden. Valenzuela. Is that Venezuela? My eyesight. It's got to be Venezuela. Yangtze Phase 1. That sounds very China. And Yangtze 2 and 3. if we're part of that, we're suddenly global. So Hive Digital Technologies, Dr. Tom Core wants everyone to know, now has 860 megawatts of power contracted globally. 440 megawatts are active today. 420 is coming through 2028. 3 continents, 1 vision, securing renewable energy, building high performance data centers, and converting that energy into valuable computing power. Dr. Tom Core wanted you to see what Holly Doan put up. Environment Minister on Saturday served legal notice that electric vehicle mandates suspended 6 months ago will be permanently abolished. More demand for oil. Repeal of the mandates will save Canadians $2 billion annually, according to new figures from the Department of Environment and Climate Change Canada. And I guess this is a picture of the Environment Minister, but I don't see her name. But there she is. Dr. Tom Core put this up for WWII Inc. The challenge isn't the volume of data, it's how quickly your systems can respond. In today's fast-moving world, scheduled workflows and static pipelines create delays that businesses cannot afford. Modern enterprises need intelligent orchestration that transforms data into real-time action. With WWII Inc., Nexus One, and other horribly named companies, organizations can build adaptive AI-powered systems that respond more quickly, optimize more intelligently, and stay ahead of change. The future belongs to systems built to respond, not just to process. Enterprises don't fail because of data. They fail because systems react too late. Sounds like a role for Railtown. Dr. Tom Core put up Hive Digital Technologies. Hive's Q1 fiscal 27 revenue, Bitcoin mining 72 million. Anyway, I thought I had it expanded, but the point is he's putting up revenue for Hive. What does it mean? Hive Digital Technologies, 350 million, 5-year term, 70 million in new annual recurring revenue. 2016 NVIDIA Blackwell Ultra GPUs, 100% hydro-powered. Merritt, British Columbia goes live in Q4. If I were a betting or a guessing man, I would say that Railtown might have something to do with 350 million AI cloud services agreement that Hive has signed and coming to theaters near you. Dr. Tom Core put the same but slightly different version up. Hive's Buzz HPC signs 350 million AI cloud services agreement with investment grade enterprise customer. Who is it? Doesn't say. Then Frank Holmes, he put up no power, no data centers, no AI, no Netflix, no Spotify, no swiping left or swiping right, no OnlyFans, and other terribly important things to society. No Instagram, no TikTok, Luddites. Luddites take these for granted or as entitlement. The AI race isn't just about algorithms anymore. It's about electricity, GPUs, infrastructure, and who can actually get permission to build. China is building. And some argue foreign influence through NGOs, activist networks, and even modern day Luddites may have discovered that slowing American infrastructure is cheaper than competing with it, with knock on effects that could even ripple high paying jobs and commodity prices and mining. This would make China happy. So here it is, more clean energy. Dr. Tom Core put this up, Buzz HPC. Quote, we are building far more than GPU clusters. We're helping build a sustainable AI future. This milestone reflects the speed and discipline with which our team continues to execute while strengthening a world-class ecosystem of partners. Together, we are creating a sovereign AI cloud platform that gives Canadian and global organizations access to sustainable, high performance infrastructure built for the AI era. Hive's Buzz HPC signs 350 million AI cloud services agreement with investment grade enterprise customer. Tom Core put this up from Joseph Zonkovitz or Zonkovich. Much is being said about the lack of startup capital in Canada, and rightly so. But the deeper question isn't why capital isn't available, it's why anyone would deploy risk capital at all in the current environment. When public markets deliver TSX returns ranging from, I don't know what that means, rising from 2,900 in 2006 to over 35,000 in 2026. I don't know what. With liquidity, instant exit options, and a new generation of investors treating stock trading more like gambling than wealth creation, the incentive to redirect gains into higher risk private ventures collapses. The convergence of TradeFi and DeFi only accelerates this. Stocks trade like memes, volatility trades like entertainment, and capital stays exactly where the dopamine is. Historically, Canada's startup ecosystem benefited from a simple pattern. When investors made money in real estate or public markets, some of that windfall flowed into private equity and early stage companies. You can correlate this across decades. Housing gains, especially in the GTA, often preceded surges in angel activity. But today, that flywheel is broken. Residential real estate is flattened after a 20-year climb. Commercial real estate is choppy. Interest rates remain structurally higher, pushing cap rates up and valuations down. Startup formation is increasingly tied to liquidity cycles, not long-term conviction. In other words, the traditional sources of overflow capital are no longer overflowing. And yet, not all investors behave the same. Angel investors still invest for reasons that have nothing to do with macro cycles, community, legacy, mentorship, or simply wanting to give back. They remain the backbone of early stage formation in Canada, even as institutional capital pulls back. It's all in cycles, and this will change. If Canada wants a healthier startup pipeline, we need to understand the macro forces at play, but also the human ones. Capital flow follows incentives, but innovation follows people to Palo Alto. So what is this? The shift in startup investment. Anyway, there's the chart. You can look at it later. And then Dr. Tom Core put up Michael Jackson. I saw that movie on the plane last night. I'm bad. I'm bad. And Billie Jean's not my girl, but she says that I am the one. The child is not my son. Canadian brain drain. 517 U.S. companies started in Canada. 414 billion raised, 56 worth more than 1 billion. 216 of these founders went to Waterloo. The pace of Canadians starting companies in the United States is increasing. Of course, you can get things done in the United States as long as you stay away from Chicago and New York. There's no countering this. Canada will just never be able to offer the same market opportunities as the United States. The pull is too strong. Any rational and ambitious founder knows where to go. For what it is worth, I'm a big fan of Waterloo grads. The school produces incredibly high quality tech talent with a fraction of the egos that you get from alums of Harvard. And here's the pipeline. They build in San Francisco over here, and Canada trains a majority of them according to this. The feeder schools, Waterloo, number one, McGill's in the middle. What the pipeline produces, 517 U.S. companies with a Canadian founder. Well, just have fewer meetings and produce more. Dr. Tom Core put up a great picture of a lion, a Genial Cloud 11, a contract in one folder, latest version somewhere else, a signature you're chasing over email. That's not disorganization, it's the hidden cost of document management. Genial Cloud 11 brings documents into your actual workflows. Less paper, less manual work, more control over matters. I like that one, Genial Cloud. Dr. Tom Core put up Hive Digital Technologies again. The first practical electron microscope in North America was built at a Toronto physics department in 1938, letting scientists see what the eye never could. Hive Buzz HPC is chasing a similar goal in a new domain, a sovereign 320 megawatt factory in Greater Toronto area, built to help researchers see what today's tools still can't. The invisible became visible in Toronto. And that's actually what your gold company, they use those electron microscopes. I'm bad. I'm bad. Um, Dr. Tom Core put up, what would you think? Hive Digital Technologies just posted 79 million in quarterly revenue, up 74% year over year, 72 from Bitcoin, 7 million from HPCHI, 52% quarter over quarter up. He either works for Hive Buzz or he's trying to signal something. U.S. State Department travel advisory map. Blue is safe, like Canada, Argentina, Australia. Looks like Mongolia. And is that Kazakhstan? But anyway, blue is safe, red is not. East Europe is as safe as Japan. But Western Europe is getting risky. Can anyone tell me why? I think it's because I'm bad. I'm bad. Gabriel Velasquez Lopez, this Dr. Tom Core put up. Anthropic is hiring compute country lead for Canada. Means that they are looking to expand their own compute footprint beyond the cloud hyperscalers, Amazon, Microsoft, and Google. This means for highly regulated workflows or customers that are asking for sovereign AI, Anthropic will be able to provide in-country inference and cloud environment hosting. It's part of a few countries where Anthropic is making these investments: Canada, Japan, South Korea, and Australia. Notably, Australia already has data center sourcing and delivery roles, so these roles are coming here soon. And I think that's where Mark Carney's old firm is as well. Dr. Tom Core, Hive Digital. Insulin was discovered on a University of Toronto campus that year, 1921, and it changed medicine. It changed how the world treats diabetes and has saved millions of lives. Today, Hive's Buzz HPC is chasing something similar in a different field, a 320 megawatt AI factory built in the same city designed to power the compute needed for the next big breakthrough. I'm bad. I'm bad. Doot, 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 doot. Dr. Tom Core, Hive Digital Technologies, 9 years, every phase compounding into the next. Years before the AI infrastructure build out began, Hive Digital Technology already had the power, the compute, and the discipline in place. 9 years, every phase built the next. Built, not chased or chast, for that matter. Chased. Hive maps out its AI expansion plans on earnings call. On its earnings call, Hive said GPU cloud business reached critical mass anchored by a new $350 million AI deal while addressing its Swedish tax charge. But why? On its fiscal first quarter 2027 earnings call, August 17, Hive Digital Technologies used the spotlight to press a single message. The company is no longer just a Bitcoin miner. President and CEO Aidan Killich told analysts the company's GPU cloud business had reached critical mass, a claim anchored by a newly announced contract and backed by a detailed pitch for why Hive stock deserves a higher valuation. Killich said a new 5-year agreement signed with an unnamed investment grade enterprise customer is worth approximately $350 million in total contract value and covers 2016 of NVIDIA's GB300 chips, adding about $70 million in annual recurring revenue. That deal lifted Hive's contracted GPU cloud revenue to about 180 million, closing in on its 200 million year-end target. GPU cloud, also called high performance computing, refers to renting out powerful chips that companies use to train and run AI models. The segment made up roughly 10% of revenue in the quarter, with Bitcoin mining still driving the other 90%. Management framed the shift as a re-rating story. Killich noted that Hive has signed about 600 million in total GPU cloud contracts this year against a market value near 800 million, arguing the stock should be due to re-rate. He walked analysts through some of the parts math, pointing to a far larger valuation as the AI build-out scales across sites in Canada, Sweden, and Paraguay. All right, and then this is Railtown's action up in Canada, up 4.5 cents, up, like Donna noticed, up 13.85% to 37 cents. It's 171,000 shares in volume. There was no news. I looked for news. And this is, if it comes up, this is the Railtown chart out of Canada. And you can see, I mean, this is how I see this chart. Other people smarter than I can give you better answers. But I think Railtown has broken out of this channel. And, you know, you can argue it's done that before, but I think this is a strong breakout. The next stop is up here at 40 cents Canadian. And then if it breaks through that on volume, the key thing I'd like to see is a lot of volume. I think it can go all the way up to those highs. And Takes a long time to get to the part I remember. See? All right, enough of that. That's the song running in my head. Chris Lacoisier. Hey, Bill, did you connect with the CEO? Sorry, I asked an X and now I'm on YouTube. Kirby said to me for the 10th time, we'll pay Lyndon cash. Huge revenue starts September. 20 million revenue by year end of 26. I just got back last night and my phone was, well, I left it on the train in Denver and then it was taken. So it's just too much to explain, but it took a long effort and I have a new, hopefully temporary phone because I can't really afford it, but I haven't put my data in it. So no fault of anyone but my own. My communications has been screwed up. But I did see that there's a email that I have to read, and I didn't read it before I went live today. And I will get to it. I intend to have a interview with Bill Kirby and Richard Marshall, and I think they will very much clear up what's going on with Lind. But those are two separate issues. The stock price is going to be under pressure for as long as the machines just see the Lind protection. It checks the box, and the million shares they have, it gives them some backstop to just violate Reg Show every single day. That doesn't mean that the stock is going to zero or that it's going to have to issue a bunch of stock. It's just the mechanics of the market. And it gives people a chance to buy the stock. It was, I think, 165 or something when I brought it up and I did that interview with Richard Marshall. But I warned people they're going to drive it down. And I still think they can drive it lower. But I don't think that's a permanent event. I think their strategy is microseconds. They abuse Reg Show to profit, and the easiest direction is down, and anything Lind is in gets destroyed. That's how they've set up their computers. But I do believe that Next Trip has a strategy. I also am now convinced, I wouldn't talk about it otherwise, that they will escape the clutches of Lind Partners, partly because they demanded the document be rewritten, and also in large part because of their anticipated increases in cash flow, not just revenue, free cash, and because they have deep pockets standing ready to bail the company out from any provisions in the Lind contract. But the computers don't care about that. The computers do not study the fundamentals. The computers just grind. They just sell. They just violate. They just drive stock prices downward. So it gives an opportunity to buy the stock of Next Trip. But if you're checking your screen every day, when you buy it, I would say it's unlikely to go up, more likely to drift downward until the company makes a material, defined, with numbers that are real in the press release with projections that are real. Once they start doing that, and the computers can analyze, well, the company's going to be doing 500,000 a month or 1 million a month or whatever the number is, and they owe 338,000 a month to Lynn Partners. Well, if their revenue now is 1 to 2 million a month or whatever it is, they're going to be able to pay that, and the computers will start backing off. But what will make the computers move the box, take the box upward, is when institutional buyers show up. And institutional buyers will show up when those numbers are real. And I think that's what's coming for Next Trip. But I can't hide the fact that when you sign a deal with Lynn Partners, your stock is going to be under attack. That's what they do. That's all they do.
Don't get it, do you? He'll find her. That's what he does. That's all he does. You can't stop him. He'll wait for you, reach down in front, and pull a fucking hard ass. Let's go, mate. Still don't get it, do you? He'll find her. That's what he does. That's all he does. You can't stop him.
That's all Lynn Partners does. They create contracts so that their 4 clients can destroy market caps. That's all they do. That's all they do. But I think the documents were written differently at the insistence of Bill Kirby and his legal team. And I think there are material differences in the contract than what a standard contract would read. We can't hide away the fact that the machines will act like the Terminator. It's what they do. It's all they do. But what will stop it, and I've said this, and I said it when I talked to Richard, news announcements are not going to stop the punishment of the stock price. What will stop it is hard, fast announcements. We just booked a contract and we're going to be making $1 million a month for the next 20 years. That would change it, but it's very rare that you see an announcement that explicit. It's not really allowed. But if analysts at an institution get that information, well, then they start buying and the bid-ask box moves up. Anyway, you can't hide your head in the sand that when you sign with Lind, you've signed up for crushing of your stock price. But that gives us an opportunity to buy the stock at I think, an inexpensive price. And I don't know what magical time institutions will buy. I personally think we're seeing it in Railtown now, but I don't know it. You always know after the fact. But as Next Trip executes, they just bought this technology that is going to lead to increased whatever the metrics are, eyeballs, they don't use that term anymore, imprints or implants or whatever the metric, they always use different metrics so that you're in awe of their brilliance. But basically, Nextrip bought this huge audience base that they can now sell advertising dollars on, and they have their bespoke travel platform, which is a technology that they acquired. So it's all coming together, and they're now generating revenue. If Nextrip executes as they intend to, the 338,000 a month for 14 months is completely funded and absorbable. So without more than 1 million shares, there's no question that Nextrip is going to issue 1 million shares to Lynn Partners. So there is that dilution. 5% of the company, well, right now it's more like 8%, is gone to Lynn Partners. It's a fact. But I don't think it has to be worse than that. But the computers don't know that. The computers don't know that. They don't care. They don't care about words. They just care about the opportunity to manufacture shares under Reg Show minute by minute, second by second, and then profit with the dark pools crossing everything. And they have the 1 million shares in that contract as a bit of a hedge. So they're just waiting for a misstep from NextBridge to really pour on the juice. I personally think Nextrip is not only going to survive, I think Nextrip has huge upside targets on its stock price. So I think it's a reasonable, it's an attractive risk reward investment. But if you're buying it, you got to know August, September, even October, they're going to keep doing what they do. So you've got to have a longer term time frame. But it can change quickly. Again, what changes these stocks is institutional buying. It's the only thing that changes them. You send a new Terminator in from the future to attack the current Terminator, and that's what turns it on. So, but yes, Chris, I am going to have an interview. I don't know exactly when. Hopefully, it'll be this weekend, or maybe first part of next week. Chris LaQuassier, he said he emailed to you his availability. Yeah, I saw an email that I was copied or directed on before I came live. I've been catching up on other things. I did not read that email. And I said earlier in this call that I am going to read it and respond to it, but I didn't do it prior to going live. I do assume it is to set up a call, and I look forward to it. I really do. I think it's a great opportunity to invest and make money. But I was in Texas 2 weeks ago and last week in Denver, and I've just been really on the road and swamped. Chris LaQuassier, thank your gloves come off. Thank you, gloves come off. Sorry. Thank you, gloves come off. Nextrip, it's all about cash flow positive. He'll explain when you have him on. I look forward to it because he's bad. He's bad. Chris LaQuassier, you were 100% correct. Dumb deal for a loan. But paying off 2026, all right, so let me finish Chris quickly. 10,000% tell Kirby that he will do it. 10,000% tell Kirby that he will do it. All right. Harbison. Next Thursday, the 27th, after the market closed for earnings. Yeah, I think that's right. I didn't find it recently, but I remember seeing the 26th or the 27th. I think that's right. And I think you're going to see revenues. I don't think they'll be big. I don't think they'll be big. But I think you'll see that the company has, it'll either be zero or a little bit. But there'll probably be a management discussion talking about how they've gone commercial and how revenues are coming to Railtown. I think it should be a positive. But Jason, today's price action in Railtown, to me, it's not manipulation. It's not hypesterism. I think it's an institutional buyer. And I think that'll happen in all, there's now 3 stocks that I've mentioned, Total Metals and Nextrip as well. And I think when institutions buy in those, you're going to see similar breakouts. And the key, what you love to see is volume. 500,000, 750,000, 1 million, 1.5 million. And then you know that you have something. I'm not talking about day trading. I'm not talking about trying to catch a stock into a short squeeze. I'm talking about a real fundamental story that 1 or 2 institutions pick up on, and you see that happen, and then you know you have a long upside run ahead of you. I'm not saying straight up. It'll have corrections and it'll have backing and filling, but once the institutions are fully committed and understand the story, doesn't matter what the machines do. Ward Richardson, Harbison, that's interesting. Railtown earnings report a day after NVIDIA's earnings report. Wouldn't it be fun if NVIDIA said something about Railtown? Harbison, is anyone going to the All in Montreal 26 December 1617? William, do you have a passport? Of course I have a passport. Of course I have a passport. I've got brides in every country. No, I'm kidding. Yeah, I have a passport. I had one passport stolen out of my house. They went up, came down in the attics, and they went in everybody's attic. That was a few years ago. But yeah, I've had a passport since I was a kid. There used to be diplomatic passports, the black ones. I wish I could get one of those again, but I don't. I just have a normal one. I could go to that All in Montreal, as long as I don't fly Air Canada. I could try to do it. I'll look into it. I don't know if I have enough quid to do it, but I certainly can try. September 16th to 17th. And where is it? Montreal, obviously. Obviously. All right, it's 8:14. Is there anything in the news that matters? I hope not. This guy, Perez Hilton, I don't know what he did with a knife, but my imagination, it says it's a nightmare. My imagination runs. Doesn't look like we're at war anywhere. That's good. Well, and more so than we already are. Caitlin Clark is being mauled on the basketball court again. All right. I don't see much here. Who's Kim Zolciak? Looks like a nightmare mother. Yeah, it looks like a quiet Friday night, so nothing to talk about. Harbison, top 100 AI startup showcase at all in. Wiser AI showcasing agentic AI platforms that monitor and predict third-party and cyber security risk. It's an AIP company. Harbison board leadership, Rob Goring, the founder and CEO of Wiser, currently sits on the board of directors. Wiser is a great company to buy. I haven't mentioned it because I don't want people selling out of Railtown yet. But if you have extra money, I think Wiser will be a $4 stock. It's a pretty big run from 5 cents. But I'll look into going to that conference. That's next month. We'll see. I'll try. But I'm not promising. Because even though it's priced in loonies, it's still a lot of dollars. All right. So with that, unless somebody has something to ask me, I think I'm going to sign off for tonight. And Chris, I will. And it wasn't only you who were asking. It was Justin as well. I will get that interview done for next trip. I do think it's a great opportunity. And if we're fortunate, Railtown rallies in September and October, and maybe we can take advantage of next trip's prices, or we do it from now. So with that, I'm going to sign off. I wish everybody a good night. And I'll try to come on tomorrow since I missed so many days here. Maybe I'll have an interview. Well, anyway, Chris said there's a schedule of times. I'll pick one and I'll let everybody know. Until then, sayonara.